Hi guys, this is Satish here. I am founder for Creating Wealth Company, and in this video I am going to share about how you can choose a right investment product for yourself. Yes. Any investment product you choose and it should have a good compatibility for yourself. That is most important. You should never regret after taking a decision to buy any investment product. That is the intention of this video. I see many people who actually have the remorse. They feel bad about why I choose this product and what is going to offer. They do not know about the future or they do not know why they have made up their mind to buy this product. I will talk about 5 golden rules. You should keep it in your mind when you choose any investment product. Let it be an equity product, let it be a life insurance, fixed deposit, gold, or real estate. Any investment product, these 5 golden rules will help you in getting this investments advisory or your compatibility for the product. Okay, what is the rule number one, which is the return expectation? Do not go with a plain recommendation or the advisory what the advisor gives to you about the return expectation. Do your own research always, that helps. What was the returns offered the last 1 year, last 3 years, 5 years, or 10 years, the rolling returns this product has generated, because that would give you a fair understanding about how the product behaved in various times, because in last 10 years the markets were not at the same levels. It has gone up, gone down couple of times. So this would give you an idea how the product behaved in volatility times. Anyway, past performance does not give any guarantee for future performance, but it would give you an idea of what was the average return the product has produced so far. That is most important in order to give us a understanding about what I can expect from this product in return perspective. Second is the risk. The fundamentals, the economic fundamentals will never be the same. What is the inflation today is something different from what it was earlier 3 years back. What are the GDP growth today? It's something different from what was earlier. How these factors actually important or alter the product performance. Is the returns going up, going down, depends or have any implication on these factors? Yes, you need to have a check on this. Higher the risk, always higher the return. Lower the risk, lower the return. So when any changes happens in the fundamentals of economics, how your product return changes, there are 4 things which you can actually look at it. The 4 pillars of economics, we can say: inflation, interest rate, the GDP growth, and the corporate earnings. So when any changes happens on these 4 parameters, how the return changes. So that is the risk involvement of buying that product. The third is that the liquidity. Can you able to access the funds immediately? How early you can access the fund? That is liquidity. In FD, almost you can access your funds in 15 minutes time. In life insurance product, after you are surrendering the product, you can see the liquidity in 5 working days. In case of mutual funds, it is transaction plus 3 days. In case of real estate investments, only you will know when after you identified a buyer and the settlements, the transaction goes on smoothly. So you should have an understanding about when I can see the fund realization in your hands or in the bank account. Liquidity. The fourth is tax implication. Does the product offer any incentivization when you invest in the product, ATC or ATCCC? It may be an added advantage. The most important is what is the tax implication at the time of maturity. For example, when you withdraw the product, what is the tax implication? For example, in mutual funds, equity related mutual funds, any maturity after 1 year, which is completely tax free. Capital gains are completely tax free. After 1 year is virtually tax free. Before 1 year, you have to pay flat 15% of tax. So you should understand. For example, what is the tax implication on fixed deposit? What is tax implication on debt schemes, life insurance? You should know. You should have an understanding about it. So these are the boundaries, the ground rules you need to know. The fifth important factors is the charge. What is the cost of acquiring the product? In case of life insurance, what are the administration charge, the fund management charge, what are the various other, the mortality charges or the administrative, the various other charges involved. In terms of mutual fund, what are the charges involved? So without knowing the charges, you should never invest in any product. Some product will have upfront charges, some product will never have any charge structure that would have inbuilt in it. Have an understanding. Read brochures or the product documents. Kim and Sid in mutual fund will say. Have an understanding about the chart structure. If you want any mutual fund or any kind of an investment advisory, FD, mutual funds, life insurance, you can always reach out to me. I am Satish. I am the founder of our Creating Wealth, and you can reach out to me in 98410 Thank you for watching video. These are the 5 golden rules. Please remember these rules whenever you choose any investment product. Thank you.